investors' demand for the CBN Special bills have pushed rates in the fixed income and money markets to double digits as liquidity constraints continue to stoke bearish sentiment. Ifeoma Onyejekwe, a fixed income trader at UBA, joins us now for a weekly market wrap. Ifeoma, it's a pleasure to have you on the program. So I guess the biggest takeaway this week is that move into double digits for yields. And I want to know, in your view, how significant that is and what do you think is coming next in terms of the trends we can anticipate over the course of this quarter?
Thank you, Wally, for having me. So yes, you're very correct. From the beginning of this week, we've experienced severe system illiquidity. We've seen banks be at the standing lending facility window as well as the CBN repo window all throughout this week. So it's been a very huge crunch in the market. Money market rates have been at ceiling rates of 14%. And then to our very big surprise, we saw that the CBN carried out industry CRR debits today, further adding to the illiquidity. There's also a retail auction today. And also in the fixed income space, like you said, last week we saw interest, a lot of interest on the CBN Special bills, and was trading at single-digit levels of 5%. But this week, due to the huge liquidity, we saw market traders not minding to take losses and sell down on those bills in order to create liquidity, pushing them up to 11% levels. So we'll see this also continuing next week due to this retail auction debit as well as the industry CRR debit. So we'll also still experience severe illiquidity next week, or else unless the CBN intervenes with the CRR refunds.
All right, so let's talk a bit about how the challenge really facing the central bank in terms of really managing system liquidity, but at the same time trying to make sure that those rates don't go excessively higher. How do you see that balancing act working out moving forward?
Question.
Okay, I wanted to get your thoughts on how you see the central bank balancing the challenge of keeping the market relatively liquid, but even though obviously they want to tighten a little bit, but then also ensuring that those rates don't go much higher than they are right now. Do you think one just simply has to give as they try to tighten, and it's inevitable that we'll see higher yields moving forward?
Well, definitely we would see higher yields, and even in the bond circular, the third quarter bond circular just released by the DMO, we've seen a slight increase in bonds being offered by 15 billion to 240 from 225. And also in the Nigerian Euro bond space, we've also seen yields increase to be trading at double-digit levels. So plus the illiquidity and the fact that we'll see more traders dump more local currency bonds to buy foreign currency denominated bonds. So yes, definitely yields are going to increase as the federal government seeks for more funding, and to placate investors, we'll see them increase their stop rates.
All right, so let's talk a bit about if we can touch the forex markets as well. Significantly as well this week, we saw some weakness in the I&E window rate. I think it got to about 425. I wonder if it has stabilized a little bit since then. But I think that was providing some concern to observers. Have we seen any changes in those trends since?
Not necessarily. It actually has stabilized this week because you know that it's a buyers and sellers market. So like people will demand will meet people with supply in that market. So we've seen it stabilize around 429. So yes, it's been pretty stable in that market.
All right. And what is the outlook though in your view? Given all we know about, of course, we know foreign investors' interest is more or less muted. It's really a case of how much the central bank can provide to that market. How do you see things trending moving forward?
Well, we've still been seeing consistent intervention. We've not seen, any challenge by the CBN in intervening in that space. So we also believe that they'll consistently continue to intervene in the forex market.
But is there any evidence of supply from anywhere else at the moment? Or is it really a case of the central bank being the one and only supplier?
Well, generally, for the Nigerian government, we've seen that a major source of foreign exchange is from our crude oil receipts. And then in the news, there has been news about, major oil theft, which has increased dwindling foreign receipts. So that has been an issue. But like I said, the CBN, they have been consistently intervening in that space. Although, yes, we've seen that, like, it's been a challenge for the federal government, but the CBN has been consistently intervening to stabilize that market.